Let's jump into gold and silver and the market update because there are some big things that are happening that are connected to blockchain and crypto. You guys are not going to want to miss this one. Before we get started, I want to thank our sponsor, and that, of course, is Tangem, where you can actually hold tokenized gold. All of that available on your own self-custody wallet and available right now over on tangem.com. Very easy to set up and very easy to use with super security there, guys. So you should be doing it. Right now, they have a really cool offer, which is basically you get a second wallet 50% off. So use that code. Go there now. You're going to get that extra 10%. So it's like, stacking discounts. Use the code. It's going to help you guys get started and get moving on self-custody. Even if you already have self-custody, use the link down below. Listen, there's a lot going on in the gold market right now and the silver market. And we wanted to bring someone in that could help us unravel all of what we are finding on our research. You know him, and that is Mr. Andy Schectman coming in from Miles Franklin. How are you, Andy?
Paul, I'm great, brother. Thanks for having me. Hope you are too.
Yeah, okay, so we have a lot to talk about today. There are some interesting things happening. To a certain extent, I will say that there are some things happening that may unveil a big master plan. And I want to start it off with, Andy, on something that, and you and I will get a chance to talk about where Tether plays into this, but I want to show you something real quick. Tokenized commodities right here. We're looking at it. You guys can see the amount of asset holders and the kind of movement. I'll zoom in on that for you guys to see this little bit of movement right there on Paxos. So big bump right there. There's some reasons for that. But this is digital gold, and we are seeing a movement that is happening right now. 300,000 holders, Andy, for digital gold. Gold has made its way to the blockchain. Andy, do you think, is this regular OGs buying this, or do you think this is a new gold buyer?
I think it's hard for me to think that it's the anything but the new buyer, because a lot of the OGs wouldn't even know how to
get it.
Yeah. Right. What it is, it's digital rails increasingly carrying claims on real world assets. And that is where we're going. And I think gold could potentially become money with modern rails. And I think that's when you look at the historical weakness as everyday money in terms of its practicality, heavy, difficult to divide, expensive to move, cumbersome, etc., this digitization potentially changes all of those characteristics without changing the underlying asset if you do it right.
I would have not said that gold is money prior to about the last 6 months of research we've been doing on this. I think it is now. I think we're at that point, and some of the things we're going to show you today may line up exactly with what you're saying. And you've talked about this a little bit in terms of a theory that Tether is, I won't say secretly, but is buying gold in a way on behalf of the US government. I want to go to a tweet right here. This is a guy by the name of Brandon Lutnick. Now, this is Howard Lutnick's son, and he, of course, is congratulating Paolo, who is the CEO of Tether, in reference to not only the audit that's gone through, but also the strategy, I think, that Tether has been making, and that is shifting a lot of Bitcoin over into gold acquisition, which of course continues to climb. And with that being the case, if you kind of connect the dots here with Cantor Fitzgerald, which is owned by Howard Lutnick, and the amount of money that these people have involved into Tether themselves, this starts to change things up a bit. Give me a basis of what you think is going on here with Tether and gold.
Yeah, I don't know if I'm stupid to say it or just say what I think is plausible. On one hand, you had Tether in trouble with the Justice Department, kind of fizzled out. You have Bo Hines, the former crypto advisor for Trump, his confidant, now in as CEO of USAT Tether. It's kind of like putting Stephen Mirren, who wrote the Mar-a-Lago Accord, into the vacated role at the Fed, in my mind. You have Tether, who reportedly bought more than 27 metric tons of gold in the first half of this year.
Yeah.
They bought more gold in the last couple of years than anyone in the world, even more than China, except for the Central Bank of Poland. And it's interesting that simultaneously, the issuer of the world's dominant dollar stablecoin is buying all this gold. Over the last 4 weeks, they've bought over 701,000 ounces.
Yeah.
And so I think that, there's no question that they understand what gold is. But the theory is simply this, that, and in particular when you factor in the Genius Act. The Genius Act goes into effect next January.
Yep.
And the Genius Act says from that point forward, whenever you move money in dollars, it'll be backed by stablecoin. It'll travel on the blockchain network and settle like Venmo or Zelle. And it will be backed by stablecoin, predominantly 90-day or less short-term U.S. Treasuries. So you're creating synthetic demand for the Treasury market, which, by the way, you could argue really curtails the dual mandate of the Fed, because it's going to pin the front end of the curve to the ground. But the interest, as we know, is not transferable, and this is where my theory comes into play, in that if the U.S. government wanted to accumulate gold to ultimately devalue the dollar, to reindustrialize the country, and to make paying off our debt much easier. There's been a lot of people who have, including Vice President Vance and the previous economic advisor Jared Bernstein to the Biden White House, who cited Triffin's dilemma.
Yeah.
We can't afford to be the world reserve currency because the world needs more dollars than we can provide through trade alone. And so those countries continuously have to sell their currency to buy dollars, which creates a massive devaluation between the two currencies, and eventually manufacturing flows to where it is cheapest. And this is how you eviscerate and hollow out your manufacturing. The conclusion is that you cannot be the world reserve currency and have a trade surplus. So how does all this play together? When Roosevelt confiscated gold in '33, he paid everyone $20.67, a 67-cent premium to the $20 face value of the 1 ounce coin, which was a lot of money back then, 67 cents, when a dozen eggs was a nickel. But then he immediately devalued the dollar by 40%, making gold $35. This is how you devalue the dollar, not against the dollar index, but against the one neutral reserve asset, gold. So let's look at how Tether would do this. Anytime money moves, Tether takes the interest that is accumulated from backing the stablecoin from January forward and buys gold with it. Now, this keeps the U.S. government at arm's length. You could argue everything we've done since then, over the last year or so, 2 years, what if there was a deal struck? We're putting Bo Hines in here. You guys aren't in trouble anymore, but here's what you're going to do. You're going to take that interest, you're going to buy gold, you're going to devalue the dollar. That gold will go on your balance sheet, and slowly over time, you're going to sell that gold to the U.S. Treasury, which will bolster our reserves, our assets versus liabilities. It will ultimately devalue the dollar. It will help us reshore. It'll help us do what we need to do, and you will continue to do this. It will keep us at arm's length. And I find it very interesting that the one company that is so well known in the crypto sphere is buying more gold than anyone in the world but one central bank. And it just seems to me that there's something more than meets the eye here. And part of, you take a step back and say, well, what did Tether just do? They opened up the back end of the Justice Department, because we saw the Treasury Secretary Bissent get on stage and say, with the help of Tether, we've identified 4 wallets that belong to the IRGC. And we've actually blacklisted their stable coins at the smart contract level. They don't even know what happened yet. So evidently, they have KYC, know your client, KYT, know your transaction, AML, anti-money laundering, and programmability, and have partnered, in my mind, with the Justice Department in that respect. Then you throw Bo Hines into it, look at all the gold they're buying, and look at all these things and put them together, and to me, it is very easy to say that someone within this administration, and thank God for them, understands that the only way to reshore manufacturing and give our kids and our grandkids and national security a choice, an option, a real chance, is to let gold go higher and quietly use that to, in essence, default on the reserve status. Now, that's the key, is let go of the reserve status to accomplish all of these things through higher gold.
Okay, so much there to unpack, because to your point, the signals were kind of coming, and the other signals I think that kind of landed your idea was what was going on right here, and that is Tether and their Big Four audit. So you first had that, so now the reserves exceed liabilities. Notice that second story right there, Andy. Tether audit gets a clean KPMG opinion, all right, on their 25 financials. And then right underneath that, Tether targets an $11 trillion payroll market with USAT expansion push. Now that is a big deal because, and this gets back to the point I'm getting to, and that is Cantor Fitzgerald, what's going on with the USAT, which is Tether's stablecoin that'll eventually be the stablecoin of use, to your thesis that gold is really being set up here as a takeover for dollar devaluation. All of this seems like it has been enacted in a very short period of time, which kind of goes to your point there of the acceleration of Tether going after gold. But why wouldn't other countries figure out that this is what's happening right now?
They have. I mean,
so you think that was why we saw all these other countries and central banks rushing to try to get gold on the balance sheet?
No, I think that's what woke up the United States, is that the central banks have been buying gold at a level no one has ever seen before. And I think someone got to this administration and said, if we don't get on board with this, we're in big trouble. Now, one of the things that I've been saying is that look at all the deliveries. Now, I want to explain to you the naysayers about this theory. I say, look at all the gold deliveries. They are off the charts.
Yeah.
So normally, I've been doing this 36 years, Paul, and normally futures contracts never stand for delivery. Less than 1%. A producer who mines gold will forward sell his production to smooth out uncertainty. I will hedge. If I have 2 million ounces of gold in my warehouse, I'll sell 2 million on paper so that my inventory and my exposure are neutral. I'm not going to take delivery. A farmer who plants a field of wheat in April wants to sell the forward production to the baker who needs flour in September. This is what the concept of the COMEX is for, to offset risk. And so very less than basically 1% or less of all contracts have ever stood for delivery. And we keep seeing over the past 19, 20 months, billions and billions and billions and billions and billions and billions delivered. These traders say, no, I want the real number bars, Paul, in my account, not the paper settlement. The naysayers say, but yeah, that's just the traders trading back and forth. It's not all leaving COMEX. Well, what if that's the other part of this? Treasury Department, through the Exchange Stabilization Fund, Bissett, who understands gold intimately, it was his largest holding when he ran a hedge fund. He gets it. He says to the banks, listen, you're going to start standing for delivery on behalf of the U.S. government, and we're not going to offload it right away because that will wake everyone up. Bing, 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 bing. Look what they're doing. Instead, you just leave it there for us. The Treasury Department doesn't care if it's sitting in your account on the COMEX. We'll slowly take it from you. You look at the amount of deliveries, it's 4 feet of snow in Death Valley in July. It is so far unusual, and I don't care that not all of it is leaving, some of it is staying, a good portion of it is staying on COMEX. So what? What is different is the actual movement of the numbered bars and the physical delivery. You can call it whatever you want, but it stinks to me. This is so far outside of what has been normal forever that there is some very, very, very big money that for almost 20 straight months is standing for delivery alongside the other central banks, alongside companies like Tether.
All right, so to your point, you have Besant making the statement right here, and this also kind of paints a bigger picture, because remember, Cantor Fitzgerald holding 130 billion in treasuries, additionally 5% of Tether they own, Cantor Fitzgerald. You've got Howard Lutnick, who is the Commerce Secretary, tied, hip and hip to Trump's administration and also to Scott Bessent. You got Secretary Bessent right here saying that the Treasury is moving quickly to implement the Genius Act, and beginning January 18th, to your point, this is when it all comes together. So we're only a few months away from that happening, and that will be the law of the land. You've got Tether out there just acquiring and putting a lot of pressure, and then boom, you've got the UK FCA now preparing a regulatory framework for tokenized gold, trying to protect London's 70% share. Here's my question, Andy. If we're seeing tokenized gold, you saw the numbers going off the charts there on Paxos, which is somebody's buying digital assets in gold, and it's just begun. If that is starting to shift into the regular digital asset and maybe younger trader thinking gold is an asset I can buy and move and hold and do other things with, Could they at some points put some pressure on London in terms of the master supplier?
1,000%. But even before that happens, Paul, I think the pressure is already on London. What we have seen over the past few months is opening of, in particular, 3 different exchanges or programs within 3 exchanges. Number one, you have Dubai, which has a same-day settlement contract now, but it's in dollars. Excuse me. Same-day settlement instead of futures. You have Singapore, same-day settlement in dollars instead of futures, and now you have Hong Kong. Same-day settlement, but in yuan. So what China is framing as internationalizing the yuan is actually trading amongst on top of rails like the SIPS, the Cross Interbank Payment System, and the mBridge, which are both operational now, free from the intervention of the SWIFT, trading across those rails in local currencies, settling imbalances in gold. So China buys oil from United Arab Emirates, pays for it in yuan, and bang, they're able to convert it into gold in yuan without going into dollars and take physical possession. And the expansion of all of these vaults throughout the Belt Road Initiative, we already have them in Dubai, Mumbai, Shanghai, Hong Kong, Singapore, St. Petersburg, Moscow. The BRICS are talking about a new vault that they're going to build into Brazil. All of these vaults will connect in called the vaults are like the arteries, the rails of these payment systems are the veins. And I think gold is being remonetized or reintroduced into the system as the ultimate form of collateral that meets the digital age.
Well, you've got some other movements happening right now in the digital gold side. You've got Paxos, which is now on the governance council for Robinhood Chain, which is going to be another DeFi element that is going to connect digital gold. You had Paxos also joining the Solana developer platform, which we think when you look at silver, we'll talk about that in a minute because Solana now live as digital silver on Solana. This starts to paint things up. And then you had EtherFi. Andy, this was a big drop last week. EtherFi now is essentially allowing cardholder, well, anybody that's got an EtherFi, to borrow against their digital gold right now inside the app. So this essentially is like a neobank that has the ability, and I'll go to their app right here. You can kind of see it right there, earning on your assets. You see gold and what is coming soon where you'll be earning possibly yield on your gold, borrowing your assets, being able to utilize those, including metals, so both gold and silver. This is a very big deal because if this starts to migrate into a lot of younger investors who have not been gold buyers, they have been crypto buyers, and they start to understand what's happening right now, especially in the DeFi space, this could get big quickly. Can gold handle that?
Yeah, I mean, I don't think it has to compete with the digital asset revolution. I think it can be part of its infrastructure. It'll just have to be more expensive. And I think, in particular, it will happen. And this is why I've made such an effort to forge relationships in your industry, because I believe we see the world very similarly. And I think it's just that a lot of people have spent not enough time understanding how similar we actually are.
Right.
And when you look at the World Gold Council in their white paper, they came out and said, look, our idea is to make all of these digital applications more interchangeable. They are explicitly contemplating fractional interest in vaulted gold and how gold, like to your point, can become collateral instead of just sitting in a vault.
Exactly.
Properly structured digital gold ownership, I think, makes vaulted physical gold very, very attractive, even to younger people, easier to pledge as collateral without having to sell the metal, as that says. And they identify collateral use as one of its biggest opportunities. So yeah, I think that it will attract younger folks. But to me, the most important thing, and the more they begin to understand counterparty risk and these kinds of things, is that the argument, it's heavy, it's difficult to divide, it's expensive to move, it's cumbersome to settle, all that stuff. But I still think you have to start with one thing, and that is, who owns it? How do I get it? How do I get the redemption? Can I collateralize it?
Yeah.
And work backwards. And that's exactly what the World Gold Council stated vision truly is. So yes, it's going to become fully fungible, and I think that's, you know, accessible, movable, usable, all that stuff across financial systems. I think that is where we're going, and I think young people are a whole hell of a lot smarter than they're given credit for. I think once they dig into this, it'll start to resonate.
Well, you have PaxG right now paying 9.3% yield on gold. And the cool thing is that if we do see well, not if, we're already seeing the use case of being able to lend against, borrow against, or put your asset to work in a potential, let's say even a bear market down the road for gold. This would give traditional gold holders a way to earn money in a bear market without ever selling the asset. So the gold price would continue to hold, maybe flat, but still being able to hold in a bear market and do exactly this in terms of earning yield. So that in itself is going to be huge. And it will most likely track in, I think, a lot of young investors. Aave also has become the leading DeFi venue for tokenized gold. So if you look at this chart right here, just to give you guys an example, that's Aave v3. Then you look at Uniswap, which I'll talk about here in a second. And there's Uniswap v4 and then Aave v4. So between these two, you're talking about 70% all of DeFi tokenized gold being held in those two platforms, significantly going forward. I want to play a clip for you and then get your response. Let's take a look. All right, so that's basically trading silver on Jupiter, one of the biggest platforms out there in Solana. We've seen it on gold. Now you've got it right here with Dominion Silver out there within Jupiter. This starts to move things pretty aggressively, Andy, between gold and silver becoming which asset do you own? And this could get kind of crazy in a very fast way. Tokenized silver on Solana, now, of course, through Dominion, it absolutely exploded the last few days. So you have silver now vying for the attention of what's happening out there. Both tokenized gold and tokenized silver being able to be used in collateral. We'll talk about that in a second. But between gold and silver, which do you think the younger and more digital audience of crypto would go silver, or do you think they would continue to buy both or try to land on one place?
No, I think just the economics of it point to silver. I think silver. Also the mathematics of it. There's a lot to be said for the story behind silver. It's disappearing. It's depleted in nature. It's 6 years of a structural deficit. It's needed massively in military applications that aren't even counted in the supply-demand numbers. And if it weren't for the Western, and this is where your earlier question about challenging London, what has distorted the prices is the ability of banks, central banks, commercial banks to naked short with not great transparency. It's very opaque, but the amount of shorting where they're trading 200 times per day the amount of a deliverable silver every day on the COMEX.
Yeah.
So if we are able to have transparency with the blockchain and have a whole generation of people who understand instead of dismiss. We've been fighting forever, and I've always thought that was silly. These two industries have far more in common.
Yeah, for sure. Well, and it's getting,
yes, I think
it's
we'll have
speeding up.
A massive impact.
Yeah, it's speeding up too. I mean, this kind of opportunity, especially when you look at just this article right here, and that is tokenized gold and silver now as productive collateral. You'd be able to use this with perps. This is Ondo. This is insane to me because it completely shifts the thesis of owning a metal. You can put it to work, baby. You can put it to work. You can go earn yields on this thing and continue to hold it, which is, I mean, this is better than money. Because you can't do that with the US dollar right now. I can't go out there and look at earning yields at this level, as well as putting it into productive collateral for something like perps out there. So this is a huge shift, Andy. I think we are onto something in a very big way. I want to play a clip from Hayden Adams that kind of talks about this, and then I want to get your opinion. Take a look.
You can imagine, like, that the best base pair for some securities markets might be a commodities market, or a commodities market against a basket of commodities. ETH USDC has been the biggest market on Uniswap. And the reason for that is because everything else flows through it as a bridge. And so what you can imagine about the efficiency of these systems is you have these like correlated hubs. Like you have like an asset that has like a bunch of correlated pairs against it. And then that asset has a bridge pair against like dollars or, right? Like imagine you have like some sort of oil basket to oil stocks or commodity and probably commodity as well. To like dollar pair, like the dollar to like basket pair becomes like really high traffic, which just generates a lot of natural demand, which basically brings in sophisticated professional market making firms, which is already what's happening on ETH USDC. And then you have these correlated pairs have like more bespoke market makers that want to be long both assets in the position. They want to be along the basket and the underlying. So their opportunity cost becomes way lower because they don't have to hedge their inventory risk because they want their inventory risk. And they just have to hedge this much lower divergence delta, which is also a lower than it would be. And so that's kind of like a model that is how I'm envisioning it.
Yeah. I got most of that, but maybe I lost some of it. There's a lot in there. What's the 30-second, like, why does this matter for me? What's the actual impact?
End users buying things, getting better prices. On the demand side, it's actually the yield that is earned from market making flows to more people. So like right now, all the like the yield of market making flows to a few top market making firms. You can have assets that are in passively sitting in Uniswap liquidity pools, also earning yield and a lending protocol. Pretty cool design, pretty useful. It really lets you like reduce the opportunity cost of market making because you can also be earning your yield. The way that TradFi systems work, it just doesn't even connect.
All right, so let me break that down for you guys, because what Hayden was talking about there is the threshold for market making is going to be lower, meaning more market makers. So Andy, for a guy like you versus all the market makers out there in gold that there are, this essentially, this new evolution of digitized gold, especially at the pace in which we're seeing this for physical gold being acquired, this could be a boom for companies like yourself, just because you're going to draw level with a lot of these big guys overnight, it feels like, especially with this capability that Hayden's talking about. What do you think about that?
100%. And I think that in essence, look, I think you could simply say that gold solved physical scarcity thousands of years ago. And the question that I ponder quite a bit, which is kind of what you're getting at, is what happens when this physical scarcity gets digital rails?
Yeah.
And I think it's coming, and I think those who roll with the changes will benefit. Those who fight this will get rolled by those changes.
Exactly.
And there's no question that digitized direct ownership of physical gold is here. And when that record represents enforceable ownership in identifiable or properly allocated vaulted metal, it is a game changer for this industry. Huge. And now you not only are speaking to the younger demographics and the folks who understand digital assets, but you're also going straight away into the institutional buyer, because right now they're pretty much relegated to buying ETFs, where you're paying JP Morgan and BlackRock a 50 basis point management fee to hold a poor representation of the real thing that you can't even take possession of. You can't pledge as collateral. You can't do any of these things that we're talking about at a much greater cost, whereas this will provide far greater access, far greater liquidity, the ability to use it as collateral, the ability to move it cross-border, the ability to do all of these things with far less friction, far less costs. And I think what it really does, I think it destroys the ETF industry. I think GLD, SLV, all of these ETFs are in very big trouble when something like this becomes a little bit more common.
One thing I want to point to, Andy, that kind of brings this home a little bit before we get into our lightning round, is if you look at some of these alternative assets that have moved so violently in a very short period of time. One is CXMT. You guys remember this because we have been talking about this. This is China's chip company. And just in the last few days, we're talking about a 22% move. You can kind of see just in the last few hours, the super spike. We talked about this last Friday. You guys remember the video. right there, we said China liquidity pump is coming and it's draining crypto. We were also talking about Tether in general and what's happening in this, because I think all this stuff is connected to these alternative assets. And then even Mark Cuban came out and said, hey, I don't necessarily agree with this, but it was interesting that he said chips is a new asset class, will be the new crypto. The point being is that these alternative assets are starting to trade a lot like crypto. We've already seen it in the semiconductor space, the AI space. Now I think we might see it in the metal space. So get ready, guys. Andy, let's go into a quick lightning round with you. I want to kind of get your opinion on a few things. And we'll start off with my first question, which has has it officially abandoned Bitcoin in favor of gold?
I'd say unofficially, so probably false, but
unofficially. Okay.
Yes.
I think they have. I think they've abandoned Bitcoin. I think they are in on gold. Genius Act stablecoin yield ban was a handout to gold. What do you think?
100%.
Yeah, I think we're going to be on the same page on a lot of these. Here we go. Which shady government pushed stablecoin wins? Do you think it was Lutnick's through USAT or USD1 with Trump?
I think that's easy. I think it's Lutnick's.
Lutnick, okay. I'm with you there.
Yeah.
The LBMA COMEX is to gold as PSA Vault is to the TCG market. Both will be disrupted by faster moving DeFi narratives. This is what we're talking about, Andy, being able to use gold in a whole new way.
Absolutely, they will. 100%.
Okay. Disruption inbound. Will Chinese small businesses choose permissionless DeFi gold or the Shanghai Gold Exchange? Stay controlled.
That's an interesting one because the Shanghai Gold Exchange is really trying to expand through state-sponsored gold accumulation programs. I would say stay controlled for the Chinese.
Okay, there you go. I think they would want to use DeFi, but I believe the problem, there may be a black market for DeFi. So I'm kind of in the middle there.
Well, I was kind of in the middle with the first question too. So
there you go.
We'll call it even.
There you go. Tokenized silver is moving the silver price more than tokenized gold moved the gold price. And just to show you guys the chart, that is the silver chart right there. This is the movement. And I want to show you something. If you zoom out on this, Andy, look at that trend line from the high on silver. Wouldn't you say this might be a breakout?
Yes, it's what that's called as a falling wedge pattern, and when it's very bullish when it breaks through that trend line. I will say that if indeed you get some real traction behind these silver programs, there's no question that it will absolutely accelerate silver's rise, probably faster than gold's.
All right, right there. It was at 64. It is now nipping $65, $66 an ounce.
Very bullish technical pattern right there.
I like it. All right, so we're going to say true on this one right now. And then let's go over here to this one. Gold boomer CEOs who aren't actively participating with DeFi platforms are now completely lost. And I'm talking about the guys that you compete with, Andy.
Yes, there's no question that they are. And when you see the biggest names in the industry like Gold.com, which is A-Mark, which is the largest wholesaler in North America, if not even bigger than that, partner up to a degree with Tether, there is no question that if you're not with it, you're falling behind.
Hyperliquid proves COMEX has only pricing power Monday through Friday, because you're going to be able to do this pretty much all the time soon.
Well, yes, that is true. But if I'm not mistaken, and I don't want to misspeak, but I believe COMEX just did a 24/7 1-ounce contract trying to
compete with this?
Yes, okay. But I agree. I mean, then that is where things fall short, because for those who don't know, from Sunday at 6 p.m. Eastern, or Friday at 6 p.m. Eastern to Sunday at 6 p.m. Eastern, the market is asleep, and there's a lot of movement. If you can do something in between there, the whole thing is pricing is moving away from the Western system.
Yeah, which 100%. Is boomers are forced to check prices on DEXs, which is what you're saying. All right, which asset will end up paying more yields in DeFi, do you think? Now that we have silver, what do you think is going to happen here? You think gold will continue to, because there's some good yields out there in DeFi on gold right now, but do you think silver takes over?
I think gold has to, just based on the mathematics of it, because you'd have to have a very large silver position to generate a meaningful yield.
All right.
And I don't think there's enough of it to challenge gold's role in that
Yeah.
space.
Yeah. All right, here we go. Last question. Which asset is going to hit all-time high first? Silver, gold? We'll go back to the chart. Right there, silver, as you guys know, all-time high hit not too long ago. So what do you think? Do you think it's going to be gold or silver?
Normally, and you can see a rising wedge pattern there and a breakout there. Normally, gold goes first, silver goes further. So if I were to guess, gold sets the all-time high first, and silver leaves it in the dust before it's all said and done.
Okay, all right. Well, there you go.
In terms of percentage gain.
Yeah, for sure. Well, you know, that's what people look at. All right, Andy, we're going to get you back on the show because I have a feeling we're going to be talking about this asset a lot more in the digital side. And where this is heading is going to be very intriguing. So you guys know where to find Andy. By the way, if you're not following Andy's YouTube channel, is it Miles Franklin Media?
Yes, sir, it is.
Okay.
And it's always a real honor to be here with you, Paul. I admire you tremendously. As someone who sees these two industries have a lot in common, and I really appreciate the opportunity to come on with you. You're a class act.
Yeah, man. Thank you very much. Listen, it's kind of a bullseye right now because I think the industry is now starting to wake up.
Yeah, but you were doing it long before it was a bullseye.
I know. Well,
so
I get that.
I applaud your open-mindedness. And hey, the difference between intelligent and smart, I know a lot of intelligent people that are stupid as a mud wall. And I know a lot of people who don't have maybe the pedigree of education that are very smart because they open their mind, they can say they were wrong, they can listen, they can learn and adapt.
And learn. Yeah,
to me, that's smart. You're very
that's the way
smart
to do it.
and intelligent.
I love it. All right, Andy, it was good seeing you. We will have you back on the show soon, so thanks for coming in.
You got it, brother. Stay well. Thanks again.
If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.